To most investors, today's positive trading continues to demonstrate the indecisive nature of the markets. As we can see, the Dow has been in kind of a wedge sliding pennant formation now for the last 2 months. However, to the candlestick investor, knowing that this is a bullish harami that just touched the 200-day moving average, which was about the support area of the last bounce, that this bullish harami basically tells us the selling may have stopped at an important technical level. Positive trading tomorrow would confirm the fact that the bullish harami has told us the selling has stopped. And if they start trading and closing above the T-line, we're back in an uptrend that should take us back up to at least the top of the trend channel and possibly making a double bottom and the consolidation is over. The Nasdaq also had a strong reversal signal and a big hammer signal today, also a bullish harami, which would tell us with it closing right here at the T-line that if they open positive, the Nasdaq is heading back up. So on the short-term basis, the candlestick investor at least has the implication that the longs might now be back in control for a little bit and look at the short positions to see whether they should be covered. Then once it gets back up to this important level, which is the resistance level, if it breaks out through there, we know they're probably in wave 1, wave 2, consolidation, going into wave 3. The signals in the T-line are very important indicators. Number one, the signal itself tells you that there's been a change of investor sentiment. And two, with a close like we saw in the crude oil prices, with a close above the T-line, the 8 exponential moving average, which had obviously been acting as a resistance level in the downtrend, has now changed to the point where the buying is starting to come back in. There could be a possible bounce back up to the 50-day moving average, and at that point, see what occurs in crude oil prices. But during that time, that would be making a good trade as well as probably bringing oil stocks up on the short-term basis. This would allow investors that use a combination of both fundamental and technical analysis to make the appropriate trades at the appropriate time, such as our long-term recommendation on Whiting Petroleum, who has a major interest in the Balkan field up in North Dakota, that it's doing a fry pan bottom with a left-right combo and now breaking out to the upside, telling us that we could be buying this, especially if it breaks through the 50-day moving average. There could be a good percentage move on the short-term basis, as well as knowing what the fundamentals of Whiting oil is, makes this probably an area of a confirmed buy, both for a short-term trade and a long-term hold. This information applied to with knowing what crude oil prices are doing and what the market is doing essentially puts all the stars in alignment for an investor to be in the right place at the right time. That'll be it. We'll see you in the chat rooms.